Larry Fink thinks that Bitcoin is its own type of product. Fed's Neil Kashkari says Bitcoin is still not worth anything. Also, Michael Saylor thinks Bitcoin is like digital algae. These sound bites are great, but I want to show you why you should only focus on two $100 trillion asset classes to know that a recession is not likely and why, in the long term, you should be bullish on Bitcoin if you aren't already. Let's start. Hey everyone, my name is Dante Cook and I work for Bitcoin. Basically, making it easy for you to understand economy and markets. Sign up if you haven't already. This channel posts videos 6 days a week. Today I'm going to show you just the two $100 trillion asset groups that you should be paying attention to. This will help you ignore the rest and only see the signal. Let's go. It's mostly what we think of as a new world money option, right? It's a global decentralized object that is not sovereign. It's also an asset that doesn't have any country-specific risk or standard counterparty risk. So these are interesting qualities to look at from an investment point of view, especially in a world where worries about printing money, currency debasement risks, and political and economic problems in the US and other places are growing. That was Robert Mitchnick, who is in charge of digital assets at BlackRock. In the past year, BlackRock has gone from being skeptical of Bitcoin to being bullish on it. Their CEO, Larry Fink, is known as the best market maker in the history of finance. Here's what he told investors about Bitcoin last week when they released their Q3 earnings. Of course, I don't know if either candidate for president or the other would make a difference. As time goes on, I do think that digital goods will be used more and more around the world. There are talks going on with groups all over the world about how they should think about digital assets and how they should be distributed. And by that I mean that we think Bitcoin is a separate type of object. In place of things like gold, it's an option. This might make you more optimistic if that doesn't do the trick. Yesterday, $556 million came into Bitcoin ETFs. Many people had 239 million. When $100 million came in, Bitwise broke into the nine figures. BlackRock, also known as IBIT, got $80 million in new money, and ARK got about $70 million. All of the big players saw money coming in, and today was the biggest day for ETFs to get money since June. Guys, if that doesn't make you feel good about the market, we caught a rocket with chopsticks. Oh, thoughts? There were two wide cornerbacks start for NFL teams this past Sunday, the first time in 20 years. If that doesn't make you feel good, read this. A wide cornerback chance program might be a good idea for the NFL. Any wide cornerback who gets playing time should get a bonus. I'm kind of joking around here, but not really. Now let's go back to Bitcoin. If this gets you excited, this will get you even more excited. Michael Saylor talks about Bitcoin's virality in this new video with Andy Ostrom and the on-ramp team. He says that you don't really see the effects of something until it's already very big and growing very quickly. It's what he calls monetary algae. One of the first things they told me at Might about this was, if you have a pond with algae that doubles every day and covers the whole pond in 30 days, what day of the month will you notice that there is any algae at all? Most of the time, you don't even know you have any. And like on the 26th day, you start to notice something. Next, in 3 days, the whole pond will be covered. Yes, therefore, as an exponential process grows, it seems like there is a lot of nothing going on. Then there's a little blip. Then all of a sudden, there is more going on. Like Apple stock, right? After 40 years, it finally reached $1 trillion. It took about 18 months to reach $2 trillion. But you see that as a phenomenon. And that's what this is, a phenomenon that's spreading naturally around the world like a virus. Thoughts? On the other hand, some people still don't see it. Like Neil Kashkari, the head of the Federal Reserve in Minnesota, who said that Bitcoin is still useless, even though it's worth more than $67,000 a coin in US dollars as of this morning. When he says things like this, he should know better. Would you say that everything the Fed has done this week amounts to plugging the system with money? That's right. And you can do that forever. We will always be able to do that. Now for my main point for today, because today is a great day to buy stocks. Everything you read, watch, tweet, or hear about Bitcoin will be very positive. But some other day, bad news is coming. The inflation rate is going to be high. People will talk about going to war. There will be a reason that makes you forget about Bitcoin's long-term path and promise. When it comes to Bitcoin, all I like to do is help you block out the noise so you can focus on what's important. To help you understand why you should be bullish on Bitcoin in the long run and why the financial markets can't go into a recession right now, here's a bigger picture. A lot of people get caught up in the little things that happen every day. The bond market, on the other hand, is worth $130 quadrillion. The world is controlled by this market. In the past, the US Treasury market, also known as the long bond, has been the biggest and best place for other countries to keep their money. Also, more and more other countries don't trust the US Treasury. 33% in 2014, but now it's only 22%. This picture shows the same thing again. What else are they buying besides just treasuries? And things that are hard like gold. This is a very well-known figure in the field of macrofinance. It basically says that the long bond is in direct competition with gold. And if you flip the US long bond or the 10-year government note over, you can see that these two things should be linked. When they separate, it means that different people have different ideas about how much something should cost. If you look at these charts, you can see that people would rather keep their long-term income and assets in gold than in dollar bills. And Larry Fink has said in other comments and in his Q3 earnings report that people all over the world are betting that US fiscal policy will get worse instead of better and that they need to invest in other things. Bitcoin is one of the things that they are mostly thinking about. There are $130 trillion going into a stock market worth $50 trillion, a gold market worth $18 trillion, and a Bitcoin market worth $1.3 trillion. That means that $130 trillion are going into assets worth $70 trillion. There is a chance that the 70 trillion will become worth more than the 130 trillion. It's an easy deal. This is my second point. You should pay attention to a different type of assets worth $100 trillion. And this helps me understand why it doesn't matter if Trump or Harris wins. People aged 55 and up own and manage 74% of all investable assets in the US. This number is likely the same around the world. This is a list of goods worth about $114 trillion. This is clear from this chart. A new study from the University of Michigan says that the average value of a person's stocks in the US is over $250,000. This means that the rich keep getting richer. In the long run, the people who own assets win. Do you think that the US government will crash the values of boomers' investments just as they're retiring and beginning to take their money out of the market to spend it? Without a doubt not. Luke Roman talks about this in a new show and does a great job of explaining it. There is $114 trillion in wealth among people aged 55 and up in this country. 70% of the assets are owned by them, and they are on what we call the biggest you only live once spending spree in history. Everything is full everywhere I go. Everything needs to be reserved, and everyone there is at least 55 years old. So there is definitely a split in the economy. At the low end, things are definitely slowing down, and they may even be going into a recession. Unless we live in a country